Morning traders, welcome to the Traders Lab. I am your host, Tom B. Thanks for stopping by today. We've got quite a lot to talk about. I stream live Monday through Friday, 11:30 to 1 p.m. Eastern Standard Time. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab chat?
Sellers always 120.
Okay, great. How are we doing in Bookmap Discord? Can I get a check, please? Are you guys having a problem in Discord? Okay, I'm going to drop the Discord stream. It's going to be YouTube only. How are we doing in Discord now? Is it clear? Guys, I need to hear if you've got me in Discord or not. I'm not getting your responses. It doesn't help me. So, how about it? All right, thanks. Well, look, everyone, I'm Tom B. This is the Traders Lab. This is about integrating Bookmap Orderflow tools with auction market theory using a volume profile in the intraday developing time frame. This is about the business of trading using structured trades that are available to everyone at no cost, as well as a library of webinars and the Trader Lab community in the Bookmap Discord Trader Lab chat. There is a link in the bottom of YouTube if you're interested in delving into what this is all about. Let's take care of business and let's take a look at today. It's rather unique, as you guys probably know, with the big gap and run. So it's one of those things that I do discuss. Another part of this is I have been speaking to Trader Lab participants, and I want to suggest to everyone out there who's listening to this stream. Today is June 12th, 2024, and for over a month, I have been suggesting that Trader Lab participants review and start educating themselves to what a blow-off top manifestation is and what it looks like and its behavior. This is a potentially very dynamic and not a event that most traders will experience, or if they do, it's going to be only a few times in their careers, potentially. You need to understand what this is, what the mechanics of the market and the behavior of the market might be. If you're in Trader Lab, again, a recommendation, of course, do homework, do research, understand different market conditions. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember this is not a trade calling room. It is based on structured trades available to everybody at no cost. And the link in the bottom of YouTube can take you over to the Bookmap Discord server. Take advantage of all the resources that are available at no cost. So RTH open. So as you guys know, we have substantial gap. Uh, I can't see everything at the moment in my charts, but yeah, good morning, Stephen. Thank you. Um, let's take a look. Now I'm going to take you into structured trades. Those of you who've been following the stream, you know these trades. If you don't know these trades, click the link in the bottom of YouTube. There's 60 PDFs of these structured trades. This is what I do. And what I do is not change what I do. I'm using structured trades that have been vetted to get in alignment with the condition of the market. Everybody takes stops. Everybody does whatever. The market is random. The idea of understanding the business side of trading is to only interact with the other participants when you have a statistical edge. It's gaming theory. It's very simple. And that means every game, every outcome of every game is random. So in the casinos, they can't predict the outcome of any game, but they only play games that have statistical edge. It's the same for us. So if you can understand the business of gaming, then you need to develop games. And what games are in our business are structured trades, or as you guys think of them, setups. If we only play games that have a statistical edge, then our job is to wait for that trade. So let's look. Let's look at some key elements here. This is the RTH Open, 8:30 Central Time. This is called developing volume point of control. We're in a big gap. This is the retail price. Now, often, and I always post these things in TraderLab for TraderLab participants, and you're all welcome to TraderLab, remember. Great community. What do we anticipate with a huge gap? Remember yesterday's plan. It was the market goes down, the market to go up, and the market goes up to go down, right? Well, the market went down in the morning yesterday, and then we had long trades only on the way up. And at the end of the stream, we were taking longs. And the targeting yesterday, I'm just going to show you something, if I can find it, was this area yesterday. So this was our targets, and it's right near yesterday's high. Why? Lucky. This is yesterday's settlement. When you have a settlement at the high of the day, and let's look at what we did in the ETH. Where did we come back? By the way, the trade, let me just reiterate. The trade was, this is called mean reversion in a high time frame, was to come back here, this area. What happens in mean reversion? There's the other side of it. So this is below us at the moment. This is an area for the market to potentially return to. Who knows, right? Not our job. This is the ETH low. What happened? We checked yesterday's high. Too low. That sets up the continuation. So remember what we had yesterday. Outside in, and what might we have today or some point in the future? Outside in. Unless, of course, this moves up because we get acceptance. And that's neither here nor there. That's just part of the joy of randomness. So this is the open, okay? Gap. Now let's go back. And if you have questions, please post them. I'll do my best to answer them. My time is limited. If you have something that needs more detail, click the link in the bottom of YouTube. Visit the Bookmap Discord TraderLab. Loads of traders in there. Senior Trader has over 50 years. I'm going on 45 years, and you will get an answer. It is a community, and it's a phenomenal community of traders, and it's not about what I do. Everybody is welcome. Bring what you know and bring what doesn't work, and also see what might work. There's not one way to trade. It is only, but here's the answer. What is the right way to trade? You need to be consistent. It needs to have anchored inputs. You need to be able to measure it. Otherwise, you're just rolling the dice. That's called gambling. I prefer, as they say, leave the gambling to somebody else. So, and we all take risk and we all take stops. So if you don't want to take stops, then you're in the wrong business. Every business has overhead and costs of production. The idea of a stop is to be here for the next trade, not to be right. So right here, we are looking for responsive selling. What is that? Market gaps higher. What do you want to do? take some profit if you came in long ahead of FOMC. So let's look. So we have a couple possibilities. This is the overnight or ETH volume point of control. This is retail. So market opens right here. Absorption. So a seller. So we have buyers, absorption, selling iceberg. Now let's go. This is developing volume point of control. Now I'm looking at this. I'm saying, well, this is where the buyers came in. We hit support right here. Microstructure. Guys, this is the electron microscope. This is called trading in fractals using the auction and participant behavior. These are fractals, microstructure, not actionable at this point, but it is a language. If this is too low, here's my test, and this is the retail price that's too high. So support, resistance, microstructure, break low. Hold on, I've got to check something here on my, okay. Sorry, minding the stores, they say. Pull back here. This is too high. There's your test. Now, it's not a short for me. I'm not going to be selling anything. So let's look. I'm going to label this. I'm showing you the micro, guys. Just bear with. Be a little patient. You're going to see something that may surprise you. You're going to see the auction, the raw basis of how markets work, not indicator-based, not indicator-driven, behaviorally driven. So I don't use indicators. What I attempt, underline, to do is just read the behavior. So if this now is the new retail price, what the market is about is price discovery. Okay? What's too high? What's too low? It's a shopping experience. You know, you could take all your indicators and just put them aside for a moment and get back to what the market really is. It is shopping. Participants trying to figure out what's too high, what's too low. That's it. And they don't know, so they're going to auction. So this price here is where your high volume is. If it's too low, we can come back and test here. Watch. And what else is here? Overnight volume point of control. This is the highest volume in the ETH. That's our retail price. If it's too high, we may leave it and try to find too low. What's too low? Wish I knew. How about here? I don't know until this shifts down, and instead of blowing down here saying I'm not paying that, I'm not paying that, it goes maybe too low, and we come across. Watch this, the trade. We come back here. This was too high. Resistance. As an auction, I'm not paying that, but what happens here? Let's label this. You're going to see method, as they say, to madness. Maybe it is madness, I don't know, but it's one way to slice and dice the market. And again, it's about the participants. Remember, all an indicator does, and I'm not against indicators. What I think is important for traders, if you're going to use an indicator, you really need to understand the condition of the market, when it applies, when it doesn't. You know, in this condition, getting short might not be such a good idea, but we are going to look for a long. Okay. So we know this is too long. Now we got too low. We got support. We know this here is too high. We have resistance. We have what's called VPOC migration. This suggests too low. So right here, we have identified too low, maybe. This shifts higher, again suggesting too low. This is called VPOC migration. Follow the yellow brick road. That's why this is colored yellow, by the way. Hold on a second here. Got to take a look at what's going on. Okay. Nice. So let's label it. And I can't see your questions at the moment, so let me just zip along here and show you the first long. This was too high in the ETH. This is my resistance. As long as I'm under here, I don't have a trade yet. This is a maybe. So let's look at it. Watch the behavior. Too high, too high. Resistance, support, support. Watch. See the behavior. By the way, we're in here 30 seconds. Now what? Ooh, what's too low? Watch. Oh, support. Is it magic? What is it? It is the auction. Now what? I did not get long here. My long was here. When we broke above this volume, now here would be very aggressive to try to get long here. Me, not so much. This was my resistance, right? So I pull back here. This is sort of your, which way we going, Lewis? Break high above this and this, but this was the long. I posted this in the Trader Lab, and then it's put a helmet on, you know, and then it's just trailing, okay? VPOC migration. This is a Trader Lab ad if it's in your plan. What is, think about this, support, resistance. What's this? This is the new retail price. So here I come outside, okay, and I have my sellers here, fine. I have my buyers here. I have buyers. The sellers were here. They got absorbed by the buyers. So I know this area here was demand. I get my buyers, sellers try here. This was absorption. Where are these guys going? Look at the icebergs. They are being absorbed. Going higher. Who know? By the way, who knows where high is? I certainly don't. Still working on that. Come down here. Break here. Now, so right here, I'm just sitting. You know, I'm going, I don't know. And I truly don't. When this happens, this is an ad for me right here. This is saying everything below might be too low. I'm above overnight VPOC. I'm above this. I'm above this. And I'm above this. Everything is saying, go north, young man. Go north. So watch. Notice where we come. This is an ad here. Look at the support here. Variable high volume node. Do you see something consistent? I may pause for a moment here, unless you want me to continue. I'm going to come up for oxygen, guys. Thanks for your patience. I'm just trying to show you auction mechanics. How can I do this? Well, it's random, one thing. Everything, nothing works all the time, naturally. The other part of it is I'm not using indicators because I'm trying what I found, and I used indicators. I did everything you guys have done and probably a lot more because I've been doing it longer. But what I found was the more I removed conflict, ambiguity, and a lot of things that I piled on over the years that I thought was good and created randomness, when I removed randomness and had anchored inputs, I could measure it. Before that, I was measuring more by P&L, and gamblers win. So you're going up, you're going down, you're going all over the place. I mean, you could just throw a dart at a board and have winning trades. But over time, how can you measure anything if you are using multiple random inputs? You can't. So I decided, and it wasn't easy, to throw everything out. And I didn't do it all at one time because my brain, you know, when you invest yourself into something for years, and you guys know I did system design and a lot of other things, and I was a money manager. So I was obviously, and I was not a day trader. I was a position swing trader. So I was doing things a bit differently, you know. So here we go up. So this is an ad. You guys see that. I cross above this, going north, Lewis. Now, we have, well, there's two things I want to point out to you. 9 a.m., we have something called the IB30. And I'm going to come back to this because there's something very interesting I'm going to point out to you for you to research. Let me just make sure I got this. So the first 30 minutes, which is 9 a.m., whatever the high is, which is here, I'm going to mark it. I'm going to call it the IB30 because that's what it is. If I take the first half hour's high out, let me just get this in here. This is a curiosity that you might find interesting. Not a recommendation. You got to vet this. Okay, if we take this out, there's a high probability, past performance not indicative of future results, that we'll take the first hour's high out, called the IB60 or the IB high. And that is here. So what I know is on IB30, once I clear it, which is here, then I have a high probability of taking this thing out. And then whatever. So let's look. So 9 a.m., I get my VPOC migration, which sets up another long. I pull back and check the volume. This is a location for a long. And break above here, it kind of confirms it for you when you break above this. So your stop stays under here. And then you scale, which is part of Trader Lab, and then off you go. Now here we get our IB. Now this was really interesting. Nobody knows where the high of the day is. You know, it's like, where's that high? I don't know. So as I always suggest in Trader Lab, you have a trade plan and you're not emotionally attached, which is hard for us to do as mere mortals, you know, as humans. Hyde, I call it Jekyll and Hyde. Hyde's the lunatic. FOMO, the one that's talking in your ear that says, oh, it's too late to get long. I'm not going to take my structured, you know, all the noise that's in your head. The voice in your head is not your friend in trading. The voice in your head is something you need to recognize. And then when you recognize that voice in your head, then you really need to recognize it, quantify it, journal it, and then annotate how it impacts your behavior versus your plan. You're going to find that it is definitely something you got to be dealing with. So the statistic for 9:30, this is to take out this high, which we do right there. So everything's looking good, Lewis. So right here, we come up, and it looks like it's going north of the you know, north. So I'm in this, I'm hanging out, and I trail my stop. You know, I just go whatever because it's random. So let's look. We come up here. Now there's two choices right here. Now you don't know what's going to happen here, and I will get to your questions if you have any. And thanks for visiting Trader Lab. I'm just trying to catch up here. This is this is a very advanced concept I'm going to discuss. The market goes up, and we don't know where the top of anything is. And then the market can come back and check locations. It can come back to the volume point of control. It can come back to the mid. It also can come back here and rotate off. So let's go take a look and see what it does. This is micro high volume right here. I'm going to go into this. I'm going to spend a little time before I do. This was a short that's set up, and I'm going to explain it to you. And it's not a trade anybody should take because it's an advanced concept and counter trend. Okay? So let's go take a look, guys. Questions? How we doing in YouTube? Please give a thumb up in YouTube if you're getting something out of this. This is Trader Lab Structured Trades. These are available to all of you in the link in the bottom of YouTube, as well as a library of webinars and a Trader Lab community. It's all available at no cost. I'm going to show you a short, which is not a short, unless you're advanced. Here's how it sets up. Now, guys, you're in Trader Lab. You're going to want to not trade this, but learn to understand the auction. As the market is going up, let's look over here. It's, it rotates. And then if this area is too low, which is what this represents, high volume, and sequentially in fractals, if all of these fractals are too low, we're going to do the march. We're going to march. Too low. Too low. Marching. Up here. Too low. Not so much. Too high. Bing, bing, bing. Warning, Will Robinson. And what happened? Let's look a little deeper. What happened? First hour's high. We anticipate when we break. Now, we have no targets above. We have nothing but thin air. And now remember, top of the stream, I talked about a blow-off top. Blow-off tops are not done in one day. I mean, could be. But typically, it gets extremely volatile and wild. And you're going to get traders trying to pick the top. You're going to have buyers who buy the dip. It's going to be pandemonium. Be prepared for that. Not a recommendation, I have to say, but you got to research it because we're in a developing blow-off. And I cannot tell you where this thing ends until hindsight. But you need to understand market mechanics. So right here, I see absorption. I have no clue. I see selling icebergs. I see liquidity. Look at this over here. Buyers took on these sellers. This is the limit order book. And the buyers are absorbing. That's what this is showing you. Buyer bubble, that's delta. Seller blows through them. Sorry about that. Sellers here. Buyers are absorbing. It's a buying frenzy. Going to the moon, Alice. Liquidity in the book. Who knows? Not me. But let's watch the behavior. This, we are anticipating the same behavior as these other rotations. Too low, off you go. You see? Too low. You hold this here, off you go. That is like your volume point of control in a distribution or consolidation. These are just other terms for too low, too high. Nobody knows. You know, this is part of the joy. This high volume node is kind of like your support. So the way this might work is, this is the outside edge. We are holding this micro volume here. The sellers were here. This is a little more minutia, and the buyers took over. So I know this is potential support, and this is an outside edge out here, outside edge of a consolidation. What is a consolidation? Oh, it's on sale. I'm not paying that. Retail, shopping. This is what happens in your store. They put it on sale. If you think it's underpriced, because that's the retail price, you're going to buy it. If the price goes too high, you're going to say, nah, I'm not paying that. And this is what creates these rotations. There's stops on both sides. Buy stops up here, sell stops under here, clueless. This is retail. Watch. Now, I'm sitting here, and just like you, I'm going, come on, Lewis. Ever cheer for your trade? I do. But this, hey, what's going on? I'm under this now. This is a short for me. Why? I've got longs in these legs. I also have this down here and this. Let's watch. IB30. So I have the following. Too high. We fell out of this. When we fall out of this, and I know I have a price that is not being accepted, and I fall out under this, this sets up a short for me. Now, I don't sell the high, not so much. But I know the market's long now, and I know this is the retail price. If this price is too high here, I come back here to the IB30. This is right here. I was looking at this, and I was thinking, this is a potential long to come back here and here. So I was looking at this going, maybe. But, and you'll see the alignment for a IB continuation off the IB30. It's another concept I have not discussed this. Out to this outside edge. Now, right here, I'm looking at, let's come back. Here, buyers were here, and the seller, and they absorbed these sellers, and then the sellers took over. So the buyers here are on the hook. IB30. Sellers get on the hook. Come back to where? To where these sellers absorb the buyers. So you got buyers, I'm sorry, the buyers are absorbing here, but they get run over. So the sellers overpowered them. Okay? So I have high volume right there in this little structure. So this is a short for me, and it's just a short-term trade back here. And then the idea of coming back here is to look to get long again. And these are all structured trades. So let's look. What do we have here? VPOC. So this is my target. This is called mean reversion. Then if this is too low, I'm going to look to get long. And where's my resistance? I posted this in TraderLab. It was this at 47. So I took a long here. So I covered the short and got long. 47 scale. 47 scale was wonderful. Now, I scale ahead of it, by the way. 47 is a high volume note. So I just want you to understand the logic here. So I took a long right here, got a scale, got taken out right here. Put it back on, back to 47, same trade. Got my scale, holding, got taken out. Watch the trade. That's it. So that was the last trade I took. Now, I haven't seen the rest of this. Questions now. So I have nothing more here at the moment. I mean, the mid, remember, there's stops under the mid. So if you're going to get involved, it's not that you can't, but where are we? We're below the high volume. This could be a long here, but what are we doing? We're making lower highs. We have FOMC coming up. There's a lot of things here. You could also just be done. I'm not suggesting anybody do anything. We have sellers here and absorption. Where's my volume? It's here. If I get long here, I got to scale there, ahead of it. When I say there, I mean ahead of it. And why would I want to do that? Let's look at the structure. Now, you could trade this. I'm not saying you can't. It's not my job to tell you what to do. My job is to help you understand how the market works and to understand structure. If you understand structure, when you're putting a trade on, you're not waiting for your oscillator to tell you to get long up here. You're actually looking with an order flow tool, and you see all this. You want to be getting long out here. Stop is below this liquidity, and then 47 here is your scale. See what I'm saying? If it comes down under here, let's look. Don't forget, your stop is under here. This could be an add or a long or nothing. Your stop is still under here. You wouldn't be taken out. Where do you got to clear? 47. Not a trade recommendation. We'll watch it. Does this make sense? And do you have questions? Thanks, everybody. Rajim, I'm looking at your questions. I'm trying to understand what you're asking me. Trying to understand liquidity grabs. ICT trade. What is ICT? I know what ICT is. I don't even think about it. So I'm sorry I can't comment on it. I don't trade with it. And premium or discount levels. Not my process. So I'm sorry I can't help you with that. Tanya, I wouldn't. No, at the moment, my short was off after we failed at the high to get the stops out and come back to retail. Now I'm just trading rotations, not recommendations. 47 is the over under on this thing. Yes. So the long, you've got a long here to 47. You've got another same long here. 47 is the next area. Actually, it could be a little lower. It's here. See, what I do is I look at high volume. Now, does somebody want to get long here? I don't know. I'm okay with this, but I'm more of a, I don't like to scalp anymore. I used to, but I'm really more of get on and get the bigger rotations. If I know I have resistance like 47, which was the scale right from here, and then I come back and now I'm making a lower high here. This is now my resistance. My resistance is moving down. You see the volume here? If I get long here, this is my resistance. It's here. So my range to get risk neutral, it still fits. In other words, this is within my risk reward parameters for my risk to get long here and to scale here against that volume. So high volume is shopping in fractals. So if I know when we were here, that this is too high, and if I come back to check it, I got to scale. So that's why long to this. What is this? This is what trading in fractals is about. This is an auction or a consolidation. Inside of this is volume. Now, I have no clue, right? My short was to here. I have a long, right, here. And where was my volume? It was up here. So I know I got to scale. So, I got to scale before this. If I get long, I got to scale before this. If I get long, I've got to scale before this. See how the volume is coming down? So this is TraderLab long. These are all longs in TraderLab. Now, do you take it? I'm not saying anybody should. I'm saying this is what structured trading is, and having a trade plan. Then what the job is, if you accept that this is how trading might be, parsed, then your job is to just take the trades when they show up that are vetted. Remember, this is gaming. Gaming theory is all about edge. Trading when you have a statistical edge. It's not about, what do I do? Do I buy it here in midair? No. Well, up to you. But I can't. Not me. Doesn't mean that. See, the thing about this is, in a random distribution of outcomes, you're going to go through this. Gee, I should have bought it here in midair. Look what happened. Well, that has nothing to do with trading as a business. It just has to do with the random noise, So when you have a statistical edge, you know where your next trade is. You don't know what'll happen. So it's just like, where's the game? In the casinos, they only play games that have an edge. So what do? Well, if you're in TraderLab, you're waiting for your trade. You know where it is before the market ever gets there. And will the market get there? We don't know. Will you take a stop when you put the trade on? Don't know. That's trading. It's random. So when you get yourself involved with the market is about only using the structured trades that give you a statistical edge. So this is a long. And you got to scale against this volume. It's right in here. And then you hold. And the target, and this is not a trade recommendation, is this. And who knows, right? It may only come up to here, but this actually is resistance, this. And there's going to be buy stops at the high of the day. So that's all I can tell you about it. Tanya, when I talk about high volume, it's fractal. If you want to think about volume, it's shopping. So we all shop. And what basically high volume represents in all fractals and time frames, and I don't think of time is not part of my thing. I don't use the clock because it has nothing to do with how the market works. Participant behavior is what creates this, not an indicator, not a clock. So 5 minutes, 1 minute, 30 seconds. I mean, it's all up. Everybody has to do their own thing. But I found when I tried to put the behavior in a box, it distorted what was happening right here. I'm interested in what happens between this interaction. What happened here? Is it a 5 minute time or is it 10 seconds? I can read 10 seconds of behavior or 2 seconds of behavior if my brain engages, and I can read it. If I can't read it, then I'm not going to read it. Why is this important? Right here. This, and Tanya, it's a great question. You see the volume in here? It's too high. There's my seller. I come back. The shoppers return to check the volume. It's too high. Notice the volume in here. Here's my seller. I come back and check the volume. It's too high. There's my seller. There's my seller. I find my buyer. Okay, and it's the mid. Fine. Where do I come back? To my seller. To my seller. Where's my scale? At my seller, which is high volume, microstructure. So long to there for the scale. Then stop under here or wherever, helmet on. Right here, volume, variable high volume node. This trade fails under here. That's the end of it. But it's all based on shopping. Do I think the market's going up? I'm clueless. What do? I take structured trades. My job number one is protect my account and my brain. I get risk neutral. If the trade fails, I scratch it or take a few burgers out and go on to the next trade. It's just the way it is. If the trade doesn't go anywhere, I take a stop. I just have to, that's part of the business. The thing about taking stops, I understand. Nobody, quote, wants to lose. If you're in business, show me a business where you don't have overhead and cost of production. If you have a statistical edge, over time, you're going to extract the dollars from the gamblers. The casinos pay the gamblers. They walk out with cash, loads of it. And the casinos give you the cocktails and the ticket to the buffet. And if you lose enough, they'll even give you tickets to see Adele. Thanks for visiting. And maybe a bottle of champagne. How can they afford to do that, build bigger casinos? And still pay the gamblers? Because they're in a random environment and the gamblers win, but over time, the house only plays games that have an edge. If you don't know where your edge is, you're gambling. And then it's really a matter of what side of the table. When I say you, Tanya, I mean everybody. What side of the table do you want to sit on? With the house, or do you want to sit with the gamblers? And if you're gambling, you're going to have a lot of fun. If you're using backwards looking indicators and you're curve fitting them and loading indicators on, all you're trying to do is fulfill a psychological need for certainty that doesn't exist. That's the hardest part of this business. The randomness. And that's what makes us nutty. Because we don't want randomness. We want certainty. Because our psychology is wired to avoid pain. So we are going to, without being conscious of it, work furiously to try to find certainty. But we're in an environment where certainty doesn't exist. If you change the paradigm from seeking certainty to seeking an edge, you might find, assuming you don't have an outcome you're satisfied with, that your results might change. And that's what the Trader Lab is based on. I hope that is helpful. And Rajim, I hope I saw your questions, and I don't think I can't talk about this, that specific question. The HVNs are high volume nodes, Tanya. So you'll notice that where high volume shows up, like there in this rotation, this is a consolidation. And it happened right here, high of the day. Who knows? By the way, no clue. I don't think I know. I don't know. But here's what I know. I know I have high volume here because I can see it here. I can also see it here. Let me open it up for you. Just so you can, guys, I want you to see a concept because it's not complicated. We make trading complicated. I know. We think it's all in the complexity. Maybe the answer is not in complexity, but in simplicity. Because if you have too many inputs, you're going to be, what do they say, paralysis by analysis. I thought more would be better. What I found out after years of work, that more was the reason that I had inconsistent results. Right here is high volume. Now, I don't know anything about it until I see this. There's my seller. Right here, this is too high. Notice the change in behavior. When have you seen selling like this? You haven't seen it. So here's what I know. This price, high volume node, is too high. Clueless. There's my seller. Now, this is the retail price. I pull back. So I have too high. Let's go a little further. I have under here is too high. It's the outside edge. Let me bring you back. This is the beauty of auction market theory using a volume profile. Because I don't know, but let's just look here. Shopping. I'm not paying that. Yeah, but it's on sale. And it does this, right? Rotation. There's retail. If this is going higher, it's going to hold an outside edge. Oh, it's on sale. Come back here and continue. But if this becomes too high and now I fall out of the outside edge, now all these longs to some extent in here who are trailing stops might have a problem. Now, I don't know it here, but I'm conscious of it. Plus, I hit my statistic, the initial balance high, which is a high probability statistic. And by the way, if any of you guys missed this, this stream is available exclusively to the Bookmap Discord Trader Lab participants, and there is no cost to be part of the Trader Lab community and take advantage of all the resources. You'll be able to review this stream. And I invite you guys to do that if you find value in this approach. So this is support. So if this thing's going higher, it's going to hold this outside edge, and it can test it and then continue. There's stops here. So we can test it. Here's this level. The selling icebergs were absorbed. I consider this support. It's all in alignment. And if you understand order flow, you would know that also. So we have some alignment. So going to the moon, right? Support, outside edge. Outside edge. Watch. Break. Uh-oh. Change. Now what? The behavior has changed. And where do I pull back? You notice the break. Break, pull back. Right here, it's changed. This sets up a short for me to come back here. Mean reversion, advanced. You also could take it here. Notice where I'm coming. You see? I'm now coming out here. If I come to this outside edge and I can't regain and get my stop is over here, by the way. Over this, because it's too high. If I can't regain this, then this. That was my target. Okay, and then I went long from there. Does everybody see why? Is this logical? Yeah, Dinosaur, I think I answered that, right? Yeah, Regine, thanks for asking. If any of you are visiting in YouTube, there's a link in the bottom of YouTube, which will bring you to the Bookmap Discord server. And then you go to the welcome ritual, and then find your way to the Trader Lab. Say hi, and if you have questions, feel free to ask them in there. Now, don't forget, everybody is trading in there. They will respond. Also, there's a library of PDFs, 60 PDFs of these structured trades you can download. And the idea of Trader Lab is not that you do what I do or anybody else. It's kind of like finding your groove. You can take these structured trades and take one, only one, and reverse engineer it. Get familiar with it. Understand how it works. When you take one, and most traders don't have the discipline to take one, they'll take 5. That's FOMO. If you take one, you can build a foundation of a business plan and then extrapolate it and build on top of it. That's pretty much how this might work if you're interested in the business. This is a career path. And of course, past performance is not indicative of future results, but you should come to Trader Lab. You should ask the traders in Trader Lab about their experience. Good, bad, and ugly. I mean, there's nothing perfect. It doesn't work for everybody. And by the way, it is not for everybody. Trading is not for everybody. I believe anyone can learn to trade. I know not everybody can trade. And a lot of that has to do with tenacity, rolling up your sleeves, deciding you're going to be in a business, and going through the learning curve, which is going to be substantial. There is no plug and play. You can't imitate somebody else. It is psychological alignment. You'll find that too. So there's a lot of pieces to this. But come to Trader Lab if you want. There's no cost. There's a library of webinars on this process. I do this stream every day. Some of these materials are only available exclusively for Bookmap Discard Trader Lab participants, but there's no cost. So I think my mother used to say free is good. So I think free is good. You know? So don't forget, we have FOMC coming up. So this is an advanced short, and I always talk in Trader Lab, I don't call trades, and the reason is, and you really wonder, what I do is I discuss structure. You will find the trades, but you'll have a template of these trades. You'll understand how they work. You would understand that this is a short. You also would understand the trend is up. And here's how you might use this: to exit along or to get short. Because what is a short? A short is an exit of a long. If we get a short, maybe you don't take it. It's counter trend in advanced. You just pack up your toolbox and you go to lunch. And you wait for the next long. Exit. Long. You see what the Trader Lab is about? You're not here for action. You're here for potential profit in a business. You may not have an edge because of and even if you do, your job's not to get short. But in the Trader Lab, you would understand when you have a reversal at a key location and you see a short structure and we can't combat, and this is your support. When you break below it and you test it, if you can't get back here, hasta la vista, thanks for playing. It breaks here. Your teeth start chattering. Where does it pull back? To the volume. Where these buyers got stuffed. Where you see the structure? This would be your exit. Or this would be your exit. It's all up to you. Does that make sense? And then it becomes a short, or nothing. And then a long back here, and we're back in the longs. And at these longs I was taking, I was looking for this. Notwithstanding FOMC, you got kind of, so long, back here, long to here, 47, remember? Long to this volume, not happening. Back here, long to where? To this volume. Then finito, support here, back to the volume. Can't get over it, catch you later. Or nothing. You see? This is Trader Lab. This is structured trading, and the outcome of every trade is random. And at some point, when you actually do the work, and remember, the work is not done during market hours. The work is actually done outside of market hours. And the process would be pick one structured trade, make it your trade slave, become totally intimate with that one trade so you could teach it to somebody else. That's how you learn. You also need to understand how the market works. It is not an oscillator or an RSI. It is not how the market works. The market works based on the auction or participant behavior. Indicators are translators. That's all they are. Well, I think, and it's just personal from my experience, since I've been there, done that, that this is much more timely because it's language than a backwards-looking price-based derivative indicator. Would your indicator tell you to get short here, get short here, get short here? Would your indicator tell you to get long here? Not here. Here or here? Does it tell you to get short here? What does it tell you? Does it tell you to get long here? Does it tell you to get, what is it telling you? In hindsight, everything works, but we don't have the benefit of hindsight. We do have the benefit of what happened here, and we can, if we understand market mechanics, it's the language of the market, not the language of the indicator. And it's a personal opinion. I don't use any indicators. And the reason is the conflict Not that they don't work at times and can be deployed. If you understand how the market works, think what you could do with an indicator. And think about the behaviors change. So when you're in a directional market, it is not the same as a market that goes into two-sided rotational trade. They're actually different plans. And we have different trade plans in Trader Lab for different conditions. It's almost like driving a stick shift, if any of you guys are familiar with those. But even your automatic transmission, you go up a steep hill, it downshifts. When you're on the your Autobahn, it's pedal to the metal, you're in overdrive, and you got your helmet on and your goggles. When you go into this, it's a different plan. Do you know the difference? Or do you just have a generic plan and you wonder why you can do good sometimes and then you give it all back and chomp? Because you'll be trading, if you don't understand market mechanics, you'll be trading this the same as this, and they're absolutely not the same. I hope you're getting something out of this. Please give a thumb up if you're visiting in YouTube. And remember, open invitation to you guys to visit the Bookmap Discord Trader Lab chat. Use the link in the bottom of YouTube. And please give a thumb up. Always nice to get a thumb. Leave some comments. It's always good. Wally, are you in the Bookmap Discord Trader Lab chat in Discord? Dinosaur person, you're asking me what are the odds? I don't have a statistical probability for it. I will say that the odds, to put it this way, it's a structured trade. It's behavioral because this is a failed auction. This is actually, that's what sets up this. But it's not a strong high. So the idea, now the problem we have, remember, is FOMC. And the market is, was a rocket. That is the caveat to taking the trade. But if we didn't have FOMC, I would say the odds are pretty good to test because there's shorts and buy stops above here. And there's a possibility we will come back here. Don't know if, don't know when, don't know even if ever. So I can't give you a stat for it, but I can tell you that when we fit, this right here is a problem for that. And that's why it was a short. So now the longs were from here, but you got your problem. You have to clear this, and then this is your resistance, you see. So we're not getting over resistance, so that I have no longs now. I just have park. If I was trading, and I can't trade during my stream. Tried that. I can't multitask. So my last trade was the longs, this, out here and this. So all these are long. But done. The key to the longs is no matter where you enter, you got to look where the resistance is. You got to scale. This is your resistance. Coming back here, or even here, same thing, resistance. Here to this volume, resistance. Back here to this volume, resistance. Back here to here, resistance. I mean, these are all potential longs. I'm not saying you should take them. I'm just saying they are. These are structured trades. I happen, I don't like a lot of activity, just personal. I like, what do I like? This kind of stuff. I don't trade for it, but what I do is if I can get risk neutral, then my job is to take the trade. I do know where it has to clear. The fact it's not clearing it is telling me too high. Take another shot. I got to clear this. Too high, you see? And where are we going now? Where's the stops? Mid, VWAP, variable high volume node. This was too low. So we're below it. And it's also the mid. So we're going to, and let's go a little further. So I have nothing to do here. I'm a tourist. Nothing to do. This could be an aggressive short. For me, I just go to park. I just don't care about it. One of the things I find in trading is that I'm not here to be busy. I'm just here to take good trades. I mean, you could take a short in here, but it's counter trend. Doesn't mean you won't get paid. I had something else in here I wanted to show you. This was our retail price in the ETH. So the possibility is, well, there's a lot of them. One is to come out here, low volume area. So rotate out and go into something called mean reversion, which is outside in trading. The other part of this is to potentially come back here. And I don't know, it's not my job. So right here is an outside edge. And this is hard. What's hard about this is a specific trade plan called mean reversion. And we call it mean in the Trader Lab because we don't know where the outside edge is. It is outside back here. So this is the target. The problem is where's outside, so that part I don't know. Liquidity came here. We have the buyers absorb these sellers. It is very close. All we did so far was take the stops out at the mid. They were absorbed, buying icebergs. This is a structured trade that doesn't qualify for me because I can't enter here. Not my skill. So I can't do anything with this. By the time I would get in, I'd be getting in up here, So I need range. But I want you guys to observe this. This is called mean reversion. Now, the way I like the trade mean reversion, it's not a recommendation. See, here's the thing. Why wasn't this the area to get long? You see, what happened? It came further outside. What did it do here? It came outside. This is the bane of mean reversion trading. Where's the outside edge? You don't know. So what I find is when I see an outside edge, and I won't know until hindsight, now I have some structure and the retracement, and this is not a recommendation, to this outside edge volume now becomes support. Micro high volume is here. If this comes back outside, I'm going to be observing, and this is very much not a recommendation, don't forget FOMC, along to here. And then somewhere, and I don't know where somewhere is, then you manage your trade. There's going to be stops here and up over these swings. So the possibility is, and I don't call trades. Remember, guys, I'm as good at, having a problem as anybody. This is too low. Here's my volume. So this is support. Stop would be under here. Target is here. If it doesn't get back out here, I can't take it. I need the range. So let's observe this, and let me see if you have any further questions. Please give a thumb up if you find this interesting. And this is not a trade recommendation. Now, the fact that it's here is not mechanical. It is observational. So let's watch this. Buyers absorb these guys. These guys are under the bus. The volume is here. Let's just watch. Not a recommendation. I do not have, and let's just watch it. I'm not going to say anything about it. We're just going to watch it. Anything can happen. If it breaks below here, there's nothing to do. If it comes back above, then we're going to anticipate behavior. Let's see what it does. Guys, these are not trades. I don't call trades because I take stops like everybody else. But I'm looking at a location. It is not actionable until it fires. It should not be getting below here if it's going to be any good. So here's our seller. Here's some stops, iceberg buying, location. These guys are trapped here. Let's see what it does. Not a wreck. So you can kind of see right here. It's interesting, isn't it? Let's watch the behavior. Not a trade recommendation. See the interaction between the buyers and sellers right here. Sellers are aggressive here. interesting spot. Now, if we break above this volume, above the mid, then potential to go back to VPOC. Not a recommendation. Let's watch the behavior. This is like the edge of a knife. This is your fulcrum. So either we're going to fall to the upside or break down and continue down. This is if this, then that. If not, then what? If we break above this volume here, it sets up a potential long back to VPOC. If not, we do the Acapulco cliff dive. Well, not necessarily literally, but we head lower. So let's just watch it together. Not a recommendation because it could do anything here. But we've identified areas of behavior. This and this. This is it right here. Let's watch it. This is the auction. Now, we don't know what it's going to do, so don't think anybody knows. Here's what I do know. I know this is important, and I know if I think we're going to mean revert, it's going to come back here. If I fail from here, then it's just going to continue lower. Absorption, I don't have the trigger yet. I'm at a location. So that's what I'm doing here. I'm going, what's going on? Here, and it looks like it's going to break down further. But we'll see. Here's your high volume right here. That is representing this volume across here. And I'm waiting. Now, if this thing keeps going, then there's nothing to do. You're just a tourist and there was no trade. It's as simple as that. We got liquidity here. I've got sellers here. Buyers are here. Watch. Not a recommendation. Just keep your helmet on and see if you can see behavior. If you know where a location might be, and there's no precision in trading, you would be looking for the trigger. Let's see what happens. Sellers are here. Buyers absorbed here. These sellers are stuck. This guy is stuck. Buyers are here. They are stuck. Right here is your over-under. Let's watch the behavior. Microstructure. This is fractals. And I'm not saying anybody should get long, but let's just watch it together. Please give a thumb up in YouTube. I don't know what the outcome of anything is. Not my job to predict. I do understand how the market works. And as an example, if the buyers can get above this volume, I need more buyers above here, then this is where the trade would go. If we can't get above this and we fall below it, then the trade's over. It's as simple as that. It's not a big risk, you see. Not a recommendation. Are you guys tracking? You getting something out of this? And remember, guys, if you're in YouTube and you're visiting, this is trading in fractals using structured trades that are available to everyone at no cost in the Bookmap Discord Trader Lab chat, as well as a library of webinars and a community. And it's all available to all of you at no cost. Also, these webinars, these streams are available exclusively to Bookmap Discord Trader Lab participants, as well as a lot of additional education. Stocks, options, crypto, order flow with a high tier tool like Bookmap, etc. So there's a lot going on. Swing trading, options, algorithmic behavior, and a lot more. This is interesting here. So what we've done really is define a sandbox. So this would be the target because this is called mean reversion, underlining the term mean. It is a hard trade. What's hard about mean reversion is where's the outside edge. It's my least favorite condition. Just like everybody else, I like to get on the express train, drive the Autobahn. This is something, though, most of the time the market is rotational. You know, it's not, it gets directional in its different fractals and then goes into this. This is a specific structured trade plan in the Trader Lab. So we know what this is if you're in Trader Lab. What we know is we don't want to rush into it. We want to wait, because if you try to get long here, you'd be taken out. You see what I'm saying? So what I want to see is outside excess to an outside edge. I want to see reversal. I want to see the passive side, the sellers, I should say, the aggressors get trapped, which means they're absorbed by the icebergs, the passive guys. There's the absorption. Here's the liquidity. Here again, I come down. Who's on the hook? These guys are stuck. Last shot so far was here, stuck. This is a Trader Lab long, not a recommendation, and you're only trying to get here. And then if we can rotate up, then we can squeeze out the stops that are sitting above these swings. But this is the primary target. So you guys will get to see it. And remember, you know, it's random. You guys get some out of this. How about a thumb up in YouTube? Yeah, Tanya, you can learn more about mean reversion trading, which is a context in a context, if you will. Think of the trading is very much like in fractals is like Russian dolls. Russian dolls, you know, you got the big one, and inside of each one of these is a smaller one. Well, when you take a chart, whether it's a daily chart, hourly, 30-minute, 2-minute, 1 minute, if you took all the prices and everything off them, you just put them side by side, they all look the same. So that's what fractals are. The behavior of the market is generic. What we need is to understand the condition of the market. What is the condition of the market? Trend up, which means priority is long trades, unless your plan is also counter trend, which is advanced. So, you know, up to you, even though I did discuss a short in here. Once you go into two-sided trade, then it's what's called mean reversion. The context has changed. So we're in an uptrend in a developing time frame, and now we're in rotational trading in this time frame. So that's why this is the long to here. And then trade management. Let's look a little further. Where's that weak high? Now, I'm not saying it's going there. I have no crystal ball. I got a magic 8-ball. We could come here or only come here and then bounce off it. So that's why this ahead of it, VWAP in mid, is the scale. Why would I get out here? Because I might get retail traders who sell this. So my scale from the long is here. Then this is the mean reversion. We're reverting to the mean. Now, the key behind all this is, do you have enough range from entry to target, first target, VWAP? And why would we? Now, that's the mean. That's really the target. Why might we do something at VWAP? Because we might anticipate retail traders selling the VWAP, you know, mechanical traders. And remember, they can be right. So this is your risk neutral. Your stop is now under here. Remember, this is not a trade calling room. I mean, my job is not to try to impress you. I take stops. My job is to help you understand there's maybe a process that you could, if you can understand how the market works from a fundamental basis, you'll find that your indicators may not be where the truth lies. The truth lies in what creates the indicator. What creates an indication? It is participant behavior. How would you like to be able to learn to do this and be able to execute here or here? You know, I mean, that's what this gives us. The ability to take this. Where does my indicator cross over? I don't know. But you know what I'm saying is, this is the mean. Now, where's the stops? Let's come back. Here, where's the high volume? That was too high. Remember our 45, 47? All these buy stops for these shorts in this leg now are on the hook. So I trade into the stops. I have to get over this. I may just bounce off it and do the Acapulco cliff dive. But this is Trader Lab trading. This is a long in Trader Lab. Hope you get something out of this. Give me a thumb up. Yeah, Tanya, the thing about the trades to go long, it's all a function of time frame. It's your time frame, not mine. I probe the market because I have structured trades where I have an edge. As long as I'm trading in alignment with the market and in alignment with my edge, I take stops, I get scales, I get taken out, I scratch the trade, I get scales, and I have trades that go on, I manage them. That's business of trading. Now, here's the other piece. You take this process and you fit it into, quote, your time frame. My time frame is multiple. So I kind of trade inside out. Remember, Russian dolls. So if the high time frame, and you define time frame for yourself, we all do, by the way, is the big Russian doll. What I've done is I'm taking micro, the little Russian doll, which behaves the same as the big consolidation. This to this is the same as that to that. It's all the same. So this is a consolidation. I know what this is because I understand how the market works. If I can see what this is and I see my consolidation, too low, too high, volume here. Now the order flow helps me see absorption. So that seller got absorbed by a passive buyer. I see the liquidity coming up. I see icebergs buying. This is how Bookmap is giving me insight. I see these sellers here. Now right here, I'm ready to, breakfast is on its way over on the desk. What do I see? I see sellers, and the buyers in here are being, the buyers are being absorbed by the sellers, and then the sellers push over. That means there's more buying in spite of the sellers here, and there is buying in spite of the sellers here. Right here, remember, I'm going, I think this might be it. Where's our volume? It wasn't this one. Remember, I was looking here? I said, you got to wait for the retracement. This was the area. It came down. It made another low. I can't take it. I see it again here. So to see this here, Tanya, it's the same here. Why didn't I get long here? Because I don't take this one. I take the retracement, right? And Deborah, you know what I'm saying about retracements for mean reversion. I see the same behavior here that I saw here. So I'm going, and now I got my volume in here. Break here. These sellers are on the hook. These sellers are on the hook. This. Now it's get long to here and then hold. VPOC migration. Supportive at the moment. And now I got to clear this. And I just managed the trade. This is a Trader Lab structured long. Hope you guys are getting something out of this. I'd really appreciate a thumb up. And remember, if you're in the Bookmap Discord Trader Lab chat, these streams are available exclusively to you to reverse engineer. Notice where we just went. You see how this works? So now, what do you do with this? Well, for me, I manage the trade. Now, here's the other thing about this. And Tanya, you're asking me about time frame. What is the time frame for this? If this was too high, and I have my sellers, this might be the end of this trade, right there. And why might it, you were asking? Because this was the last place that was too high. Fractal. I'm just saying, it's up to you. So this trade could be done here. Now, this is hindsight, right? Remember, you got to have a trade plan. I trade volume, outside edges, to volume, and that was too high. So that's what I know. If I'm managing my trade, I might end up scratching my runner. It doesn't matter. If it matters, then that's not the business of trading. What matters is getting risk neutral, managing your runner. The market could do anything. It could just pull outside. We're still in micro mean reversion. Come back here and go. That's why this is the target for the scale, Tanya. Then we don't know what happens. Subject to your plan, you could be out here, or now you could be out. just say, oh, that was nice, see you later. And you just ring the register and move on to the next trade. Function of time frame. Tanya, the Bookmap is a order flow tool. So, it's really a tick. It's not time related. It's really more about, it's not this is what I call the tip of the spear. In fact, come to Trader Lab. There's a primer webinar. It's got about 28,000 or almost, I don't know, 28,000 views. And what it does is it'll give you a high level overview of this process. I call this the tip of the spear. In other words, all the other pieces have to be in place. And this is where I'm using microstructure, order flow, iceberg, stops, the behavior here, the liquidity. It's really microstructure. And let's go look some more. Remember, this is too low. This is too high. And you can see where. See this? Why would we be getting long here? Let's talk about it. Outside to where? In. This is the mean. It's called mean reversion. Outside, here's the other low volume node. If I can't get over this, I'm going to do this. This is what rotational trading is. Like I say, I don't like it. I just trade it, But it's easy to take stops in this condition, and it takes a lot of discipline and a different plan to trade it. That's what I was alluding to when I said you gotta wait for the retracement. And I don't put a limit order in here and what? Where's my stop go? Here, because I'm looking for the volume. This looked like this was a trigger right here. The problem was I got to have a test. When I see this and I'm not seeing my buyer, I can't get involved. I'm seeing my seller. Maybe it's going down here. When I see my buyer, and now I've got an outside edge, and Deborah, this is for you and all Trader Lab participants, this sets it up. In this Trader Lab, you got to screenshot these and put it in your trade plan of mean reversion triggers. It is different than our running triggers in directional markets. And this, by the way, let's look at this. So this is our outside edge. No way to know. So if anybody wants to know, there is no way to know. What do I see? I see no buyers. No buyers. I see a seller. I have VPOC migration. Looking good, Lewis. I have a seller here and I have a buyer. Going to the moon, Alice. What happens? The buyers in here got stuck. I break below here. It sets up to come back here. Not a short. It's just maybe an exit. Or subject to your plan, and this is what statistics are about. You have your scale here and your stop might be under here. I'm not giving a recommendation because anything can happen. If we hold this and we get back here and cross, then we can take these guys out. So we have to watch. This is part of the randomness of trading, part of the joy, as I call it, because nobody can predict this. Your job as a trader is not to predict what's going to happen because you can't. And part of our belief is, see, the thing is, we are wired to avoid pain. Run out of the burning building. Don't grab the saber-toothed tiger by the tail. Done really good for survival of the species. However, so what do? We come into this business looking for certainty, and it's based on our wiring, our instinctual behavior with, don't step in front of the bus, jump out in front, in front of it. Well, we're pushing against that primal wiring to be able to activate and take risk, where we're wired to run from risk. So we seek certainty, and it's all based on the belief that we can create certainty and our primal need to avoid pain, or the saber-toothed tiger. That's why we make decisions to do things without understanding the environment we're actually operating in, which is gaming or, casino business, really. So our job then is not to build our business on what might be a flawed belief system. And part of the problem of a flawed belief system is the random outcome. You know, gamblers walk away from the casino with cash. We can be, quote, trading something with random outcomes, which it has, where the gamblers win. So the gamblers come back and they try to fix their game, make it better, of course. Yeah, but the casino's not changing their game. Why would the casino not change their game if they're playing the gamblers? The only way the casinos extract dollars from the gamblers over a large random distribution of interactions is because they only play games consistently with anchored inputs that have a statistical edge. This is what trading is. This is the business of trading. It is gaming. And if you're building your business around beliefs that might not be in alignment with this business, I don't think it's realistic to get a different outcome, assuming your outcome is you're not satisfied with it. Most retail traders are doing the same thing you're doing. And most retail traders don't have longevity in the business. If you're not getting the success you're seeking, you might be experiencing something called Trader Groundhog Day. I went through Trader Groundhog Day for years. That was, I think I can fix it and make it better. Let me work harder. I was doing derivatives of a defective process. And early on in my trading, I really thought it was predicting. So I built trading systems, all kinds of stuff, you know. I mean, I managed dollars. So I wanted a system. I was across many different markets. I couldn't do it manually. So built systems, and they kept breaking down because it was optimization. What you may be doing is inadvertently curve fitting. You know, you go back, you look at some swings, and you adjust your oscillator, your moving average, your envelope. I don't know, pick one, you know. It's all the same, you know. Draw a trend line, move a trend line. Yeah, it fits the channel. Everybody does the same thing, right? By the way, where does this trade fail? Under here, right? Well, you know, whatever. I have no clue. Now it's on autopilot, you see? Anyway, this is Trader Lab. This is trading like a business. If you're interested in trade plans and being part of a community of serious traders, it's not romper room. Our senior trader has over 50 years. I'm going on 45. I'm still a newbie. And you can take advantage of all the resources. The structured trades, 60 PDFs. I'll show you what they look like, as well as a library of webinars in the community. It's available to all of you and everyone in YouTube at no cost. And please give a thumb up if you found today interesting, and leave any comments. If you're looking for answers, these are actual trades, by the way, I just took screenshots. I did these back, this is 2020. I'm not a vendor. There's no course. What there is community and the leverage of different traders who operate in different fractals or time frames, different methodologies. And if you're a successful trader, bring it to the Trader Lab. If you're not successful, come to Trader Lab. Maybe we can help you on your journey. And what this is about is you crafting this and make it into something that speaks to you. There's explanations of these things, and these are actual trades, like I say, and some are just screenshots after the fact. I never intended to stream. Bookmap asked me if I would stream. I said, okay, 2020. There's explanations, etc. So you might find that useful. Click the link in the bottom of YouTube, and please leave a thumb on the way out. And remember, Trader Lab, these streams are available exclusively to you to reverse engineer, screenshot, and match up to the trades you took today, and journal and build your library of structured trades. The idea of having a trade plan is when the trade shows up, you already know where the next trade is. You are not making it up. Unless you want to gamble, that's okay. Gamblers do win sometimes. But in the Trader Lab, it's about longevity and potentially building a plan in a business. Thanks again, guys. Please give that thumb up on the way out. Look forward to seeing you tomorrow. Appreciate it.